Hello, friends. Today we're taking a look at Lululemon Athletica. Ticker symbol LULU. We'll be looking at the last 5 years of the stock performance. We'll be talking about what Lululemon is all about. We'll look at the earnings report, a couple of news that just came out and affected the price of the stock. We'll also be looking at the last 10 years fundamentals of this stock and try to find a fair value for the stock. Welcome to Money Talks with Martin Reyes, where we learn to talk, to take care of our money, and to find great companies at great prices. Lululemon is a company that I've been paying attention for a while. I've been wanting to buy this company, and I don't own it yet, and I am considering buying it. And so today I am just going through the numbers with you and hopefully get some of your feedback. Let me know what you think, what I may be, whether you own it, whether there is something that I may missed, because I'm really considering jumping into this company, and you'll see why. So in the last 5 days, it's been dropping. It has dropped 6.2%, which is it's very significant. In the last month, after reporting, went down almost 28%. So that's part of my thinking too. It could be a really good opportunity to buy. In the last year, it is down 8%. It actually, I think, this week it's getting close to their 52-week lows, which was $327. But it got all the way to 517 back in December. So this could be a good opportunity. In the last 5 years, as you can see, is up 104%, even including this big drop in the last year of the last month or year to date of almost 34%. So it's been trading, the floor that has been trading is, as you can see here, is close to 300. And that's where I'm going back and forth whether to wait to buy it at the 300, if it's going to go down there. Do you think that it's going to go back all the way to 300? Or do you think that is going to stop slowing down? The analysts had a target price for Lululemon at $479, but I think that these numbers are this target prices before they reported on the 21st of, oh, well, that's not that long ago. So there should be some updates here. Well, based on this number, if it got back to $478, we're looking at a great 42% increase. And this is another reason why I keep looking at it. Analysts believe it's a buy. Earnings, they report earnings again at the end of May. It is trading at 27 times PE ratio, but if we look at the expected growth of the PE of the earnings, we're looking at somewhere around 25 times PE. So what do you guys think? Let's talk about Lululemon. What is Lululemon? Lululemon is one of the, I think it's a very interesting athletic company that is giving a run for for their money against Adidas and Nike. They are moving into different aspects. There has been some controversial stuff because Lululemon. There has been some talks from the ex-CEO, ex-founder, talking about that this is not for fat people. I'm fat, so I guess this is not for me, except just investing. And there has been a lot of different different arguments against Lululemon because of that. So let me know what you think about that. One of the things that they try to focus on, like I said, is they are growing. I know it used to be only for women. I believe they're now also producing clothings for men. It's mostly in the athletic thing, and I think they were looking at expanding in other areas. Let's look at the products. Products. Yeah, you have for men and for women, mostly athletic stuff. As you can see, yoga pants. I know I've heard women talk about Lululemon, and they love how it feels and how uh, they just love doing exercises on those things, or just having wear them all the time. When it comes to the earnings, last earnings on March 21st, they beat earnings by almost 30 cents in EPS normalized. They also beat by 8 millions on sales. Um, that's pretty nice. However, their next upcoming earnings report, the estimated earnings is almost half at 2.4%. Now, this is normal because remember this is the report after Christmas and all the time of a purchase, all the things that people purchase during Christmas time. So I wouldn't worry too much about. It's not like they're going down 50%. It's just that based on the quarter, it's going to be a little bit lower. They are expecting a revenue of 2.2%, and in the last 90 days, they have had 17 revisions down and 2 up. Part of the revisions, part of the reason why the stock is down, my understanding, is because whenever after they reported growth, but they also started they didn't report as much as expected, and they have been growing somewhere around 12%, and now it went down to 9%. And I believe in the call they mentioned that they're expecting to grow somewhere around 10%, which is way less than what they have expected in previous years. So if you have more information about Lululemon, I will love for you to write down and let me know what you think. Give your opinion. Please subscribe to the channel, and I would love to hear from you. So let's just jump into the last 10 years numbers. As you can see, Lululemon has been growing really nice. In the last 10 years, have grown almost 20% year over year, and the last 5 years has grown 20% year over year. This is a crazy growth. This is just and gross profit margins of close to 56%. This is just insane. So, can we expect Lululemon to slow down? Yes. No company can continue to grow at, especially a clothing company growing at 20% year over year. That's really crazy. When it comes to earnings, same thing. We're looking at, I mean, it has exploded, but we're looking at 22 to 19% year over year with a profit margin of 16%. That's a little low, but for clothing, that's not that bad. Free cash flow margins, they have been flat. I will say that they have been growing a little bit, except for the big explosion of 2023. So I wouldn't put too much into these free cash flow numbers growth. They're calculated by using this, the difference between here and CAGRing it. So, but free cash flow margins, it's at 13%. It's a little low, but not too bad. Free cash flow yield in the last 5 years is at 1.4. That is really low. I mean, it's okay, but it would be nice if it's over 2%. Book value has been growing at 17% in the last 5 years and 16% in the last 10. That's a really nice average of free cash. The average of return on equity in the last 5 years is 36%, which is really nice. Return on asset is at 21%, which is really, really nice, and return on invested capital at 23%. All of those numbers are great. This company is great. Doesn't pay a dividend, not a problem. When it comes to uh, long term debt, they could pay their long term debt in less than a year and a half with their free cash flow. This is a great company. When it comes to um, outstanding shares repurchase, they in the last 5 years, in the last 10 years, it has been going down. They have been buying about 1.2%, and in the last 5 years, at a little bit, it has a slowdown at 0.6. I'm not surprised because my understanding is they're trying to grow their business. So I don't have a problem with them not buying more shares and using that money to reinvest on themselves. Imagine they're using their return on invested capital is at 23%. I prefer them investing that money on themselves and growing it at 23% than for them to give it to me. So at least that's my opinion. So Lululemon is definitely a company that I am looking at. Now, what is the price to pay? Well, I am not a financial advisor. I'm just a YouTuber. I just like to give my advice or my comments. I like to hear from you. Let me know what you think about it. I'm off with my numbers? Does this look too good to be true? I am not responsible for your financial choices, and so I think that's enough of a disclaimer. Do not make financial decisions based on my opinions. Please, 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 please. With that said, let's jump into the historical multiple valuation. If we were to take the 5 year multiples and multiply the regular metrics, we will be looking at somewhere between $335 to $503 as a fair value. Now, you will notice that when it comes to free cash flow per share, and multiple, I'm using a 40 because it's been all over. So I looked at it and I believe at 40 is a more sane number if you want to look at it. When we look at the revenue per share, revenue base valuation, we are looking at a fair value per share of $588. Now, let me just do something here with you. Let's imagine that we keep it the same, right? That it actually, let's say that it this year it doesn't grow by anything, zero, right? Because that's part of the reason why a lot of people are freaking out is because of the slowdown. Let's just say that they don't grow any of the revenue for the next year, and then after that, it goes a little slower at 15%, and all the metrics kind of the same. We're still looking at a fair value today at $425 per share, which I believe is still way lower than the current price. This is the thing that is driving me crazy in my head, because remember, all my valuations has a um, discounted desired discounted rate of return of 15%. So even using these numbers, the the fair value, it's still, there's a lot of room to go. Now let me just correct these things over here and let's jump into the next valuation. As you can see, I have most of my valuations, I actually cut the growth rate instead of using the 20% that they have been using. I thought, okay, this is a little crazy. Let me just cut it in half at 10%. We're still looking at somewhere between 258 to $400 using the trailing 12 months and using a PE of 40. If we do the same thing, 10% growth for free cash flow. Remember, free cash flow had this big jump. We are looking at somewhere between $200 to $352. Using a discounted free cash flow, we're looking at somewhere between 270 to $484. Using an owner's valuation, an owner's earnings valuation, we're looking at 400 to 655. When we put everything together, and instead of just looking at the average, but just looking at the highest number that we could get, I mean, I guess if you want to look at it, if we look at the average, will be $420 as a what's it called, a fair value. So even there, that is a crazy amount. The lowest fair value using the 5 year average. And the reason why I wouldn't use the 5 year average is because if we go back to here, we see that the 5 year average is going to be very lower than where it is standing, even in the last 2 years. It's just going to be, it's going to be really, really, really out of sync with that. But even if we were to use that, we're looking at $344 if you were to use that number, which is still crazy from where it is. And if you take a 15%, you're looking at $200. $300 to buy it. But I am looking more at a average, just to kind of go a little bit in the middle. I'm sorry that I'm talking too much, but I'm just thinking so much. Even if you were to discount at 25%, we're looking at somewhere between $315 to $370. So honestly, I don't know. I may buy half a position at this price and then just wait until it goes down to 300. I would really love to hear your comments. Please put them down below. I guess in conclusion, the entry price that I will be looking at with a 25% discount is somewhere around $315. So let me know what you think. If you would like to play around with this valuation sheet, you can buy it at Buy Me a Coffee. The link is at the description. Let me know if you are planning to buy it, if you own it already, or what are your thoughts about it. Please subscribe. Let me know about what you are thinking, and I hope to see you in the next video.